What are support and resistance levels? How can they be used to make money when trading? Welcome to this episode of Ahead of the Trade. Today we are going to dive into the topic of support and resistance. We are going to explore exactly what levels of support and resistance are and how they affect the behavior of price. We'll cover how we can identify levels of support and resistance and how to draw them on a price chart using real data. We'll discuss some of the common mistakes beginner traders make when it comes to support and resistance. And finally, we're going to share with you the automatic support and resistance indicator that we have designed to instantly plot the most relevant levels of support and resistance on your chart. If you would like to find out more about this tool, follow the link in the description. Support and resistance levels are used by traders across all different timeframes and all types of trading markets to identify areas at which buying or selling pressure may increase, potentially with enough force to cause either a disruption or a reversal of the current price move. A support level refers to either a specific price level or area on the chart at which there has previously been a strong demand, resulting in buying pressure and in a bullish reversal of momentum. Alternatively, a resistance level refers to a price level or area on the chart at which there has previously been overwhelming supply, resulting in selling pressure, which has caused a bearish reversal of momentum. Support and resistance levels can be used to help us make informed trading decisions. We can use the information that they offer us to ensure the odds are in our favor when implemented as part of a trading strategy. Having levels of support and resistance drawn on our price charts will help us identify potential inflection levels in advance and help us structure trade plans. For newer traders, drawing these levels on a chart might seem like an intimidating task. However, developing this skill is of great benefit to finding success as a technical trader. Before I explain exactly how to mark support and resistance on your chart, we must first discuss the criteria for a support or resistance level. To qualify a particular level as support or resistance, and for it to be worth marking on our charts, it must satisfy one or more of the following criteria. The more criteria that it satisfies, the more significant the level is likely to be. 1. The absolute high and low of the displayed range. The high and the low of the trading range are important levels for us to mark, as they are able to be observed by traders who are viewing all different timeframe charts. 2. Significant reversal points followed by a drastic move of price. The more drastic the move away from a level, the more obvious this level will be to other traders, and the greater the chance that it will be marked on their charts as well. Remember, other traders entering or exiting the market at specific price areas is what creates the effects of support and resistance. It is important that we are marking the same levels as everyone else, which are always going to be the most obvious levels. 3. Levels that have rejected price on multiple occasions. Levels that have rejected price multiple times are going to be more obvious to other traders and will often be observed across multiple timeframes. 4. Levels that have acted as both support and resistance. Price levels that have acted as both support and resistance are important to have on our chart for the same reason. Many other traders will be aware of them as well. 5. Levels that have acted as support or resistance more recently. Levels that have acted as support or resistance more recently are generally going to be more relevant to our trading today. A level that provided strong support yesterday or earlier in the week is likely to still have the attention of many buyers if it is tested again today or in the near future. I'm sure you're now getting a sense of the theme. We want to identify the most obvious levels, which can ideally be observed across multiple different timeframes. These are the levels that other traders are also going to be watching closely. Therefore, these are going to be the levels with the best chance of acting as support or resistance, which we want to include in our trading decision-making process. Let's go through an example together of how we plot levels of support and resistance on a chart. Here, we have the daily chart for Facebook, ticker code FB, on the Nasdaq exchange. We begin by zooming out and looking at the bigger picture of the relevant historical price action. The further that price currently is from the historical price action, the less relevant it likely is to our trading today. Now that we have established a range of relevant data, we begin by marking the high and the low points of the trading range. The highest point of this particular range of data is here at $305. The lowest price point is here at $122. Next, we mark the most obvious reversal points, ideally reversals that have been followed by a drastic price move in the opposite direction. If the level is not obvious to you, it's not relevant to this step of the process. The most obvious levels that I can see on this chart include this one at $221 and another one here at $137. Now, we look to identify any less obvious levels that have rejected price on multiple different occasions. The more rejections, the more significant the level. Here, we can see that price has been rejected by this level at $246 on 3 separate occasions. Therefore, this is a level that I will mark during this step of the process. I'm also going to mark this level at $201, which has rejected price multiple times but is a little less obvious at first glance. We continue by adding levels that have acted as both a support and a resistance in the past. As you can see, $174 has acted as a resistance here, and also as a support here. Finally, we mark the levels that have acted as support or resistance most recently. These are likely going to be the most relevant levels to our trading today. I can easily identify these 4 recent key levels at $298, $289, $279, and $255. These are all levels that could possibly be tested again in the near future, and it is important that we are aware of them on our chart. Now that we have gone through and marked the relevant levels, we fine-tune them by adjusting them up or down marginally to ensure that each level has the most touches of price possible. It's okay if our levels don't perfectly touch the tops and bottoms of the price moves, as long as they are in the most logical position based on the historical price action. Remember that when trading, we use these support and resistance levels as a general guide instead of as exact points at which we expect the market to turn. For this reason, it is okay to adjust our levels marginally to ensure they are in the optimal position for us to be aware of when trading. This same process can be repeated again on lower timeframe charts, such as a 30-minute or 1-hour timeframe, if you intend on day trading based on these specific levels. For swing trading, marking the support and resistance levels on a daily chart will generally suffice. There are some common mistakes often made by beginner traders when it comes to support and resistance levels. The most frequent mistake that I have observed, even amongst some intermediate level traders, is that they have far too many levels drawn on their chart. Having too many levels marked on your chart will not only clutter your chart, but it will also likely hinder your trading decision-making processes. Traders often struggle to make informed decisions and miss trading opportunities when overwhelmed with far too many support and resistance levels drawn on their chart. The way to avoid this mistake is by plotting only the most obvious and the most significant levels on your chart by following the process that I have explained previously in this video. As well as this, another mistake that beginner traders tend to make is that they treat all levels of support and resistance as equal. In reality, some levels are going to be far more significant and therefore shall be weighted more heavily when it comes to making trading decisions. A level that has provided a clear resistance a number of times in the recent past, such as this level here, where each time it has been tested has resulted in a strong reversal move of price, will likely be of more significance than other resistance levels, such as this one here. Traders often fall into the trap of making poor trading decisions by acting upon less significant support and resistance levels. They not only find it difficult to plot levels of support and resistance on their chart, but they often will struggle to decide which levels are of most significance to their trading decisions in real time. This is often a source of significant stress and has the potential to cloud judgment and impede profits, especially when under pressure of missing trade opportunities due to a fast-moving market. Sometimes, traders will simply fail to recognize an important level and miss plotting it altogether. For this reason, at ahead of the trade, we have developed our own indicator to automatically plot levels of support and resistance. This tool can be applied to any TradingView chart and on any time frame to automatically and instantly plot the most relevant levels of support and resistance, removing the nuance from your decision-making process. It determines relevant support and resistance levels based on mathematical fractal theory in combination with historical data and can save you time and stress by eliminating the discretion when it comes to plotting support and resistance levels. It has been designed to plot levels of support and resistance on your chart and to also emphasize the levels that are likely to be of most significance due to them being formed in confluence with either price exhaustion or periods of unusually high volatility. If you would like to find out more about our auto support and resistance indicator, there is a link in the description. Whether you choose to identify levels of support and resistance manually or with use of our indicator, I'm sure you now have a far better understanding of the process involved. Remember, levels of support and resistance act as a guide for us to make informed assumptions about how price may behave around certain areas on the chart, but they do not offer us enough information to make trading decisions on their own. We need to instead use them as part of a broader trading strategy in combination with additional technical indicators, charting patterns, and price action. When used in this manner, levels of support and resistance can be extremely useful and of great benefit to you as a trader. If you have found this video to be helpful, consider giving it a thumbs up and subscribing, as it will help the video get recommended to others by the YouTube algorithms. If you would like to further support the channel and take a sneak peek at our behind-the-scenes notes, as well as a few other perks, we would greatly appreciate you becoming a Patreon supporter. I have left a link in the description. Make sure you let us know in the comments what trading topics you want us to cover next. See you next time on Ahead of the Trade.